Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. I recently did a video on Canadian National Railway and I got a lot of feedback on Canadian Pacific Railway. Seems like a lot of people own that company. So we are going to take a look at it. It is ticker CP, but it is Canadian Pacific and they just merged with Kansas City. So let's jump in. It is January 3rd, 2024. Let's jump in and take a look at this one. It's out of the industrial sector. And if you are new to the channel and you have not done so already, go ahead and hit that thumbs up if you like the videos. Hit the subscribe button down below and hit that notification bell so you are notified anytime we post any new content. Really getting close to 1,000 subscribers. Help me get over that 1,000 subscriber hump. Join us on this journey to financial freedom. Join the vested interest community. And again, hit that thumbs up, hit the subscribe button, hit the notification bell down below. Share with anyone you think that might find value in the content, and drop a comment down below. Let me know what you think of the video. Now this is the vested interest stock screener. This is also how I set up the videos. We're going to run through a quick understanding of the business. We're looking for growing free cash flow over the last 5 years and expected in the future. We want a growing dividend over time. Growing dividends are important. You don't want stagnated dividends. Now sometimes with a dividend, they'll cut the dividend or freeze it in place. That's not necessarily a deal breaker if there is reasons for it, like they're paying down debt, something like that. But overall, looking for growing dividends over time. Dividend payout ratio of 75% or less. Now, this does not apply to REITs, BDCs, some other companies where they're required by law to pay out more than 75% of their payout, like REITs do, like BDCs typically do. I'm going to check the valuation based on dividend yield theory. Buy below current cost basis if it's already in my portfolio or within 15% of its 52-week low. Return on invested capital and return on equity are two very important metrics that I like to look at. I like to look for 10% or plus or in line with their industry average, and earnings per share growth equal to their industry average or 5% or better. And for financial companies, I like to throw in price to book. Now, you can use price to book for any company. Just when you're using it outside of financial companies, make sure you're comparing it to other companies in the same sector. For financial companies, you use 1 as fair value, anything over 1 overvalued, anything under 1 undervalued. For regular companies, not financial companies, must meet 5 of 8 to make it on my watch list. And to be investable at all, then I do more of a deep dive. And for financial companies, it's 6 of 9 when we add in price to book. Now back to Canadian Pacific. And if you want to know more about this company, check them out at www.kpkcr.com. That is www.kpkcr.com. Again, this is Canadian Pacific. They recently merged with Kansas City Railroad here. You can see right here the map of all the different railways. So one railroad connecting North America. KPKC was born from the combination of two iconic railroads, Canadian Pacific and Kansas City Southern. Founded in 1881, Canadian Pacific Railway was formed to unite Canada from coast to coast and grew to reach the U.S. Midwest and beyond, with direct links to major ports on the west and east coasts. Established in 1887, Kansas City Southern began as a belt road in Kansas City, I believe is that Missouri, Montana, and grew to become a Montana, I believe, MO, became a virtual north-south rail link, providing customers with cross-border service between the U.S. and Mexico. So they truly are a North American railroad, right? Across America they go, across Canada, and down into Mexico. So really, in my opinion, this gives you access to the Canadian market, the United States market, and the Mexican market all throughout North America. You'll be able to jump on. Obviously, something like Union Pacific covers out here, so you're not getting out to the West Coast or the East Coast, but from north to south and all across Canada, definitely. So a big merger there overall. So keep that in mind as we look at some of the numbers. This happened within the last year, so this will impact some of their invested capital. Whenever you do a merger like this, it does mess with the numbers a little bit until they start to flush out with the new numbers, including the recent acquisition here. So again, www.kpkcr if you want to know more about this company, check them out there. And the reason we are taking a look at them, down 0.25%, so not a huge drop. There definitely were other companies that were down a lot more today, a lot of red in the market today, actually. But this one, like I said, we recently did the Canadian National Railway, and I got a lot of feedback on ticker CP, the Canadian Pacific Kansas City Limited Company. out of the industrial sector. So I thought we would look at that in comparison, not really in comparison. You can go look at that other video and compare them, but as a comparison to that one. They closed out the day at $78.86. 52-week range as low as $68.92, as high as $85.40. So they are closer to their 52-week high than their 52-week low, kind of floating in the middle, actually. A little closer to their 52-week high. Average volume of 2.4 billion. Today's was 3.3. Market cap of 73.959 billion. Beta of 0.82, so they are less volatile than the overall market. PE ratio, price to earnings ratio, $23.40, a little higher than I'd like for a company like this. I'd like this back in the teens, 15 to 18, right in that range would be ideal. EPS, earnings per share, is $3.37 per share. Next earnings date is January 29th to February 2nd. See sometime in that week. Forward dividend is a little low on this one, 0.57, 57 cents. They are a quarterly payer. We'll see that here in a minute. Again, low dividend yield, 0.72%. Ex-dividend date was December 28th. Looks like they're going to pay out January 29th for you holders. And let's talk about the ex-dividend date. You have to have owned the company the day before the ex-dividend date. So if you try to buy a lot of these companies on the ex-dividend date, thinking you're going to get the next dividend, a lot of times you will not. Most times you will not. I would say you will not. You need to own it the day before the ex-dividend date. So make sure you're buying the day before the ex-dividend date, or a couple days. If the ex-dividend date happens on a Monday, you're not going to buy on a Saturday and Sunday, so you'd want to buy the Friday before. But just make sure you understand the ex-dividend date is the day that they are calculating who already owns the shares and then assigning the dividends. And if you buy on the ex-dividend date, it is not going to close until the end of that day with your brokerage account. Now, a one-year target estimate, at least according to Yahoo Finance, of $87.59. So it looks like they see them setting a new 52-week high. So they see some upside in the stock price appreciation on this one. Now, I like to get into statistics, look at dividend yield theory, just like we talked about in the one of the first slides, how we set up these videos and how we judge these companies. So to do that, you can click on statistics. You go down to their 5-year dividend yield average, 0.84%. You compare it to their current, 0.72, or over here where it says forward, 0.72, same numbers. And since this one is a little lower than their 5-year average, that speaks to some potential overvaluation. Slightly overvalued, pretty close to fair value on this one, but according to dividend yield theory, slightly overvalued. If this one was higher than their 5-year average, that would speak to undervaluation. Now, they do have a very, very low payout ratio, 17%. So they have a lot of room to increase this dividend yield, which is good because it's a low dividend yield to start with. We talked about their ex-dividend date. Now, I like to get into the financials and look how healthy a company is. You can get in there, look at their balance sheet, their income statement, their debt-to-equity ratios, their assets over liabilities. Is their revenue growing? Is their debt being paid down? Are their margins increasing over time? All good information. For this particular exercise, we're going to look at free cash flow. We want growing free cash flow. That really tells you the health of a company. They can pay down debt. They can buy back shares, they can reinvest back into the company, make acquisitions like this one here, and pay dividends. And typically, if you have growing free cash flow, you have growing dividends as well. So in 2021, they were at 1.1 billion. 2020, 1.1 billion. 2021, they were at 2.1 billion. 2022 at 2.2 billion, and so far to date, 2.1 billion. So overall, from 2020 to date, definitely have growing free cash flow. I'm assuming part of this jump up in 2021. Well, no, because they just closed this. So good growing free cash flow. The only thing I do not like necessarily, they stopped repurchasing their own shares back here in 2020. Looks like they haven't repurchased any in the last couple of years. Not a deal breaker. I just really like it whenever companies are using some of that capital to repurchase their own shares. Now, I always recommend more than one source, so another one that I like is stockanalysis.com. You pick any sources that you like. Don't have to be these two. Just make sure you're picking more than one to make sure the information you're getting is accurate and up to date. That's the whole reason behind picking more than one. And according to the 15 stock analysts that have taken a look at this, they call it a consensus buy, though it is creeping closer to that hold area. They have a low estimate of $28. That's a huge discrepancy between their low and their high on this one. That would be a 64.49% decrease from where it currently sits, and that would be a huge drop. They would need to drop a lot to get down there. They have an average estimate of $92.40, which would be a 17.17% increase. That would be pretty much in line, a little bit higher than what we saw with Yahoo Finance. And if it happened to hit their high of $123, that would be a 55.97% increase. All the while, you could collect that 0.7% dividend yield. Now, I'd like to give you the statistics here and look at return on invested capital and return on equity for both of those. Remember, I like 10% or better. Return on equity is sitting at 10.5%, so that just ekes out what I'm looking for there. They are a little low on return on invested capital at 6.01%. I did look at like Union Pacific and Canadian National Railway before this. This is a little lower than their numbers, but again, they recently had that Kansas City acquisition and merged those two companies. So a lot of this return on equity and return on invested capital is going to be impacted until they start seeing the returns of that merger. Now, this is where the numbers look very nice. Earnings per share growth, I like 5% or better. This is sitting at 13.16% over the next 5 years. Very, very nice. If they were to see those numbers, I could see the return on invested capital and return on equity really increasing over time. And return on growth, this I don't really look at their revenue growth forecast typically, but I throw it in here as a bonus. They are expecting 14.73% growth on their revenue, which is extremely high, especially for a railroad company. So if they were to realize that as well, same thing. Their return on invested capital and return on equity would probably increase significantly. Now we're going to look at the dividend. Dividend yield growth, I'm going to say this is not quite accurate. Although they did drop the dividend back here in 2021, so that's probably accounting for that. But on the last one with Canadian National, they did correct me. These differences in payout from month to month, quarter to quarter, a lot of that can be attributed to the fluctuations in the exchange rate from Canada down here. I believe this is still a Canadian company, even though they bought a railway here in the United States. I still believe this is a Canadian company. There will be some tax implications as well. Drop a comment down below and let me know, is this one registered in America, if you do know, or is this now an American company because of the merger, or is it still a Canadian company? I believe it is still a Canadian company, and that's part of the reason you're seeing these fluctuations in the dividend payout because of the exchange rates. But going back to 2020, you can see here they were paying 72 cents. 2021, it looks like they actually jumped it up in March of 2021 to 74 cents, but then a big drop in June of 2021. They may have been getting ready for that merger, right? So I'm all right with that if that is the reason. I'm hoping that they weren't having some financial troubles. That may have been part of it too. But it looks like they've leveled out overall here. 2021 January was 15 cents. 2021 September 23rd was 14.9 cents. So I'm seeing that is probably part of the well, I don't know, because it's down to 13 cents. Maybe this is not just the exchange rate, but it does look like that's part of it. December 30th 2021 14.9, March 24th 2022 up to 15 cents, June 23 14.6, September 29th 2022 a little bit of a drop here down to 13.8. So the exchange rate might have gotten really wonky there. December 22, 14 cents. March 23, 14 cents. June 2023, 14 cents. It looks like they've leveled out around 14 cents over the last couple of years. So that's what I'm going to say. They don't really have growing dividends over time right now. It looks like it's pretty much flat, but a very low payout ratio. So this would be one that I'd watch and see if they start increasing that dividend over time here. Well, that is it for this one. Let me know what you think of Canadian Pacific. Like I said, I got some responses whenever we did the Canadian National Railway video that a lot of people own this one and were buying it whenever they went through this merger. What attracted you to it? What do you like better than Canadian National Railway, for example? Drop a comment down below. Let me know what you think. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment. I do personally read and respond to the comments. I'm always interested to read your questions and or opinions and suggestions. So if you have another company you'd like me to do in the Stock Pick of the Day series, go ahead and drop it down below. I'll work it in the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can but you should never invest any amount you're comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.